We've been talking for weeks about that, right? This kind of disconnect between what the average stock was doing, what small caps were doing, and the big indexes. Yesterday was not really a bolt from the blue for the overall market. It was a lot of the headline indexes, the momentum stocks, the stuff that people thought was going to hold up better that just broke. And you had a reversal in a lot of momentum strategies. Actually, that's why the NASDAQ is suffering the worst. So because of all that, because of the fact that you have had this damage being done quietly below the surface, you're looking at some of these indicators showing the market to be pretty oversold already. What does oversold mean, right? It means that the market has gone down in a hurry. It's basically stretched within its trading range to the downside. It looks like it should bounce. And also the number and percentage of stocks that are below their averages, moving averages of any sort, it shows you that the makings of some kind of a bounce are here.
Kramer was pointing last night to the idea that I think it was 10 sales for every purchase, 10 to 1 on the sales yesterday. And that also is an indication that you could be reaching.
90% of volume was to the downside, which actually through this entire bull market has been unusual. It used to be more common, but right now everything is like the computers kind of have a give and take. They sell something to buy something else. Right? Yesterday was a pretty aggressive washout. So what you look for, though, is those extremes in sentiment and positioning readings. I mean, the volatility index, yes, it's good in a sense that it got up to 20. That's an indication that basically fear is building up, but you want to see it get above 20 and then back down. So you have to see the fever break before you have a sense that buyers are coming in.
The indexes this morning, the futures on some of these things this morning, if you thought that there was going to be any buyback, well, wait, at least not yet before the market opens.
Right. I mean, look, it's probably good that it's not some kind of a weak rally attempt right now. You don't usually like to see that.
You know, I could argue if I could be on either side of the debate team. We always want.
Because you're a psychopath.
Yeah, because I'm a psychopath. But you always want that. We always crave a capitulation and a selling climax. All these things. It'd be weird if that was the beginning of the selling climax already. Because we're not, as a news organization, I don't think that we're going to start seeing this at the end. Normally, it would have more to go, I would think. You always think there's damage done. Yeah. It's going to take time. You're going to need some base building. You're going to need some more selling. You're going to have to retest the lows before you get a sustainable rally. And that's what you normally think. But it would be pretty interesting if we've had a stealth correction already. Well, and that was the capitulation yesterday. I don't think so.
One of the things you do is look at some kind of confirming indicators, right? So yesterday, the credit markets were not in distress yesterday. It wasn't as if people were selling all kinds of risky stuff. And so it didn't send a bad economic signal necessarily. So that means it's the stock market dealing with its own issues.